Here we go on our last interview here on Accelerate at the Solana event. It's been an absolute joy with everyone. Hopefully you guys have enjoyed these videos, and today it's going to be fun because we've got an ETF king in the house, we'll call it, and that's 21 shares coming in. Duncan, nice to see you. How are you?
Thank you, Paul. Thanks for having me.
So 21 shares, not a lot of people are fully aware in the Solana community about what ETFs have been doing, but there has been a lot of activity in this space. 21 shares, one of the, I would say, more innovative companies that have been able to kind of lead the charge. What are you guys up to right now that you can say, hey, here's something new, or here's where we think the market's going?
Absolutely. So yeah, I mean, ETFs have been around for a couple of years in the US and ETPs for probably 8 years longer in Europe.
Right.
What we're doing now is looking at new assets to bring to market. So what's new for the investor? They have Bitcoin, they have ETH, there's Solana. What's the next asset that they should be looking at?
Sure.
And trying to bring it in an innovative way to the end investor. So single coins, baskets, active, all on the cards.
Do you, when you look at it, because right now it's been the single token ETFs that have been very popular here in the US, whether it's Ethereum, what we've seen with obviously the success on Bitcoin, and now even XRP and Hedera have all started to go out in many of these products. When you look at that and the success that we've seen and no clarity, and we'll talk about that in a second, has this been an appetite that has mostly been driven by institutional capital?
I think it's a mix, and it really depends on which issuer is offering which product. Some issuers are stronger with the advisor community, some with retail, some with institutions. And I would say there's been quite a bit of pent-up demand for these products. We also see the whales moving across, which is kind of interesting. Like, you think that they would be like the natives, the maxis, they want to hold crypto, easier to hold an ETF in many cases.
What do you make of these new products that are being launched? You look at MicroStrategy, we've had their team on. Now they're getting into more structured instruments. Stretch is a good example of one. Do you think we'll start to see more dynamics around those kinds of financial instruments flooding the market, or do you think it's going to take some time for those kind of things to take part?
I think we'll see more of them for sure. I think the STRC, the preferred share of strategy, is a representation of, I think, the demand that we have now for more types of exposure within the crypto ecosystem. So this is a yield product. We see yield-based ETFs coming out as well. And I think that just reflects where the market is going. They want more than just a Delta One spot exposure.
Yeah. Obviously we have seen the success mostly leaning into structured capital. We also are seeing, to your point, whales and some retail starting to navigate in this. Do you think that has been held back by what has been really been dictated to the market around regulation? Now clarity gets a little bit of green light. We're not there yet, but it looks like we might have a markup. Is that maybe the thing that has been holding the market from really going all in, or do you think it's more of an investment strategy thesis?
I mean, I think the health of the market also will result in the flows coming in and out. I wouldn't say retail have held back. What I think is that there have been blockers in the way. Not all intermediary companies have been comfortable offering crypto exposure, crypto ETFs. And with things like Clarity, it's just an indication that the powers that be are supportive of the asset class. That will give confidence to those intermediary companies, the platforms, the wirehouses, to offer crypto ETFs to the end investors, and then we see the flow.
Well, and this also starts to open up the coffers for a lot of the private investment communities out there, family offices, private capital, what we'll see in some of these investment funds, retirements, et cetera, that could really play into this. That is I think that is going to be one of the biggest potential market booms that we'll see moving into the market. But is there any other area that you think could become maybe a unicorn in terms of an opportunity of investing in digital assets that maybe hasn't been really talked about?
I think decentralized exchanges are a big theme right now. We're seeing a lot of interest in getting exposure to that. So Hyperliquid would be one name I would call out. We just launched a levered Hyperliquid or Hype ETF in the US, and it's a completely different profile.
In terms of the investor?
For the investor and for the asset, it's an asset. It's a platform that can make money in good and bad markets because it makes money from volatility from trading, and so again, it's another piece for an investor's portfolio that they don't have exposure to now.
Well, and I think you're going to see a lot of the hype type projects that start to really innovate now that we've got some
100%.
more structure that could create more hyperliquid type companies out there for
100%.
sure. With that being the case, how do you guys select what you choose to put into an ETF? What's the process?
Well, we're fortunate to have quite a large research team, a large capital markets team as well, who understand the space very well. It's down to client demand. It's down to the forward-looking view of the research team, and our kind of network as well. So service providers, liquidity providers, their view on the market, their big input to how we decide what to take into market.
Yeah. What about the amount of capital deployment? Many people have said, listen, money markets, we're seeing trillions and trillions that could be deployed. Depending on what percentage of a portfolio, depending on what investment advisor you talk to, some will say it's 1%, some say as much as 5%. I was listening to Arrington the other day. Then you look at, Bell. There's so many that have kind of gone this direction of more in the tune of maybe a 5+ % deployment into digital. Do you think that's a reality?
I think on average around 5% is probably right, but it really depends on the investor, the risk and reward trade-off that they have, and the asset. Don't forget that Bitcoin has a volatility of about half of other assets. Therefore, the sizing would be reflected.
It was Mike at Digital. I could not fathom that kind of deployment in the environment that we're in right now, because it seems like right now it's not even a walk before you run, it's a crawl before you run kind of thing. Do you think that's something that can happen in the next 12 months, next 2 years? What is the market?
I mean, the market today is, although we've seen a bit of a recovery more in the last few days, it is a bit more risk off. What I'd say is a lot of leverage has come out of crypto. Okay. So we haven't seen that in other asset classes. So I would say that crypto looks like a more attractive place to put your money than equities today. If we see an escalation of things in the Middle East.
We are at 7,300 right now in the S&P, so that's a good point to the sense of, does it continue to go up? Will you see a rotation of capital? We saw that coming out of metals into basically S&P 500. That, of course, could start to move into risk assets and digital assets being a big part of that. Any kind of products that you feel are next up that you guys could talk about beyond the ETFs?
Absolutely. I mean, you look at traditional finance and ETFs and the way that it's moving from passive to active. We see the same in crypto ETFs. Right. We think actively managed funds, actively managed products in crypto are going to be a big thing over the coming years. And it's something that we are paying close attention to and working on internally. Well,
and I think the concern right now is what is going to be a yield product coming out of stable coins. We've seen a large amount of if you look at the two market caps of the big players, Tether and Circle, there's been nothing but upward growth there. I mean, Tether is constantly minting new stablecoins. But my question is, if the yield products aren't quite as juicy, does it change the way someone holds conservative capital and they really reconsider their deployment strategy instead of going into stablecoins and maybe trying to do a loop or putting it into something like a Jito Sol or into Lido through ETH?
Interesting options. I think let's not forget that the main users of stablecoins today are perfectly happy not having yield. There's a utility to holding a stablecoin, which is the liquidity and the easy movement of that asset. And so it has product market fit. What we're looking at with yield offerings from stablecoins is opening up to a much broader market than exists today.
Yeah. Well, and I think that's the big win right there, because it's going to really start to make people think about digital assets differently. And maybe for the first time say, hey, this really needs to be like a stock portfolio.
I mean, we run an active mandate. We want to include, if we've got a cash asset, we would prefer a cash asset that yields.
Yeah.
It's better for the investor.
If you looked at the market over the next year, last question, and you're concerned with anything right now from a macro environment, are you watching what the Fed is doing? Are you looking at current inflation here in the US that dictates how you guys are approaching the market?
Very much in our view, in the research team's view, in the strategy team's view on the market and how we talk to clients. I would say like everybody, we're paying close attention to what's happening with Iran and the Straits. If we see a continued blockade of that and prices at the pump increase, the impact of inflation and then the decisions that people need to make on interest rates will usually affect crypto prices, risk assets in general. So it's something we're paying attention to. I think the jury's out right now on which way that's going to go because there'll be difficult decisions to make.
Well, and it's an interesting conundrum because you have a retail investor in crypto that has come through maybe all the way from the 2017 bull runs, 2021 bull runs. They're now going through this most recent bull run with Bitcoin hitting an all-time high at around 125, and that's a completely different frame of investor than what we've seen on the S&P 500, which is
very different mindset, very different cost basis for
their investment. It's almost like two different markets.
Absolutely. Yeah. And I think we have seen pretty stable flows for ETFs, crypto ETFs. As a result, we had a couple of months of negative flows in the US. Europe's been pretty consistent.
Okay.
Small positive flows. It's now starting to turn, so we're seeing money come back into the space.
Listen, I've talked to Eric Balchunas many times, Jeff Seyfert about this. They're the Bloomberg twins for ETFs. And they just keep telling me, Paul, there's gonna be so many of these out there, it's gonna be untrackable almost in the sense of where these digital assets are starting to move. So this market is definitely heating up. Duncan, thanks for coming in today. We appreciate it.
Thank you.
All right. If you like this video, hit like and subscribe, drop a comment down below, and also join our free private member group. The link is in the description.